news all around. A lot of the sectors lifted. It does appear that some bargain hunting has come in now that shares have reached lower levels in many cases. Not so good news in the cryptocurrency markets. Bitcoin fell again last night, now down to 85,000 US dollars. That did keep the lid on some of the crypto exposed shares that we all know so well. But nonetheless, it was a good night all round. One of the reasons for that was that Micron reported and the market liked the result. Micron shares up 10%, and data storage generally benefited from that result with anticipated better results from many others. Tesla was up 3.5% or thereabouts. We saw all sorts of groups making gains, and it all came on the back of a benign inflation reading in the US. Inflation for November came in at 2.7% against forecasts of 3%. And that, of course, had people immediately reaching for rate cuts. And that explains some of the exuberance we saw in trading overnight. Now, this is only a monthly read, and it's only one read. And there'll be more inflation data released before the Fed's meeting in January. But nonetheless, the market has leapt on the rate cuts idea and taken shares higher with it. That reading, as I say, is possibly a one-off, but nonetheless, if inflation is trending down in the US, rate cuts are more likely to come in the first half of the year. And that's one of the reasons why so many investors piled into the share market last night. But a lot of it, we're looking at a lot of outlook statements from major banks and brokers around the globe at the moment. Many of them are forecasting a broader US bull market in 2026. We're now seeing investors rotating into the impressive 493 and away from the magnificent 7, but nonetheless, they're still buying shares. The outperformance of the Russell 2000 over the recent weeks suggests that is spread even wider than the S&P 500 into the smaller cap stocks in the US. And that broadening gives a number of analysts confidence that in 2026 we'll see gains. One of the reasons for that is they're looking for artificial intelligence to boost productivity and earnings. And there is potential for it to apply across the board. Now, I want to stress there's no new money being created here. AI just does some of the things we're already doing faster, but nonetheless, the increase in productivity that it brings is forecast to enhance profits across the board. We've got a bull market broadening out now, according to Goldman Sachs. They're looking at strengthening EPS and rates being cut. And for that reason, they're forecasting good gains for the index over the course of this year. JP Morgan looking for a 13% gain for the S&P 500 over the course of 2026. Morgan Stanley, 14%. UBS are looking for a 15% gain. So what they all have in common is they're all seeing positive momentum in US shares based on productivity gains and strengthened earnings coming from the employment of artificial intelligence. Now, the three sectors they identify across the board as the most likely to benefit are financials, healthcare, and communications. That's where we're likely to see the biggest productivity lifts. And it seems that's another reason why people are spreading their investments out from those leading tech stocks into the other sectors that could benefit from the introduction of artificial intelligence to their systems. Turning to our watch list today, we have SanDisk first up. Its shares rose by more than 6% in overnight trading. It's up more than 500% for the year. And the Micron result really boosted the sector overall. The AI demand that's coming through and the data storage it requires means that the whole sector is getting good support, or subsector. SanDisk, one of the key beneficiaries of that lift in sentiment. Analysts have raised their earnings and sales estimates for SanDisk. And on the Moomoo platform, it's rated a strong buy, one to have a look at. And next on the watch list is Starbucks. It was up 5% on a 2026 comeback story. Now, Starbucks shares have been under extraordinary pressure, and there's good reason for that. The business model has been in question. But investors appear pleased with management's turnaround strategy. They're looking at closing stores. They're taking a focus on China for expansion. And investors appear to give that a tick because a number of analysts now have a buy rating on the stock with a target around $96 on the back of this predicted earnings recovery. Investors who are interested in Starbucks. Might want to have a look at it at the moment, given that narrative around a turnaround in its business. And looking locally, we turn to Austal. Now, Austal is the shipbuilder that works with both the US and Australian Defence Forces. It was up 5% yesterday and is up by 100% over the course of this year. We'd already heard about a $1 billion landing craft contract. This morning, we've heard that it's signed another deal with the Australian Border Force to supply $135 million worth of boats. The stock has a buy rating in the Moomoo community at 6.24. The target is much closer to $8, and we are seeing major shareholders looking to move up the register. Another reason to be having a look at Austal for your investment purposes today.